So how much more can you really get out of something that was already pretty darn good?
But we've had a huge correction in valuations, and not just in tech, across the board. And that's, look, you could put somebody on the air who's like a perma bear or a doom person who sells like a macro newsletter, and they will say, we haven't yet begun to feel the full effects of one of the fastest tightening cycles in history. And that person would be absolutely right in pointing that out. You could also take somebody who's an asset gatherer and will only ever say the most constructive thing they can think of, and they will say, hey, by the way, if I would have told you in January that we were about to have 400 basis points worth of tightening this year, you would have told me the S&P would be cut in half. And look where we are now. The Dow down 8%. That's all you got. So there is a story of resilience. There is also a story of, hey, it might be too early to celebrate. And I think that stocks are appropriately right in the middle of that tug of war. We're not taking off to the upside. You have some bounces off the lows. You have value stocks outperforming. But you don't have a bonanza just because we think we're closer to the end than the beginning of the Fed tightening. We're all very much in wait and see. One underappreciated variable that we haven't gotten to yet, just want to mention the dollar. It is possible that the entirety of the dollar strength versus the basket simply came from interest rate differential versus the rest of the world. That might be the whole story. It might have nothing to do with Biden's policies or the U.S. is a stronger economy. Throw all that stuff out, because if we're toward the end of the rate hikes and the dollar is already failing to make a new high, and right now sitting right at that 200-day moving average, I might add, that's an important part of the story, too. That has been one of the most important signals for stocks all year. Last thing, and I have to get this out. We told you what the playbook was all year. It has not let you down. Every single time the VIX has gotten to 20, you had to look at your portfolio and say, you know what, I'm taking something off. This is too easy. That happened 5 times this year. This is the 5th time. On Friday, I saw the VIX, half day, Thanksgiving, nobody's really paying attention, low volume. The VIX got down to like 20.25, and what do you know? Monday was blood red. Today is not so great. That has served you very well if you've used that lack of volatility as your governor. Am I too long? Am I too eager for the upside? That is exactly the moment. And to the downside, again, we get a little bit of volatility. We get up into those upper 20s. I don't care how bearish you are. Go find something to buy. If you stick with that playbook until it breaks, I think you're in much better shape than getting really excited every time the market bounces.
All right.